Hello guys, welcome to my YouTube channel. In this channel, we've talked about what Forex is. We've talked about the best tools you need in Forex. Now we're going to be talking about PIP, pipettes, lots, and spread. Don't forget to subscribe and don't forget to share to your friends. Now, the first thing we're going to be looking at is what is PIP in Forex. A PIP, in short form, percentage in price, is the smallest unit of measurement for price changes in the Forex markets. If Euro USD moved from 1.1050 to 1.1051, which is a change in price. The example that was given, that rise or fall in price is called 1 pip. Now, so moving to the next slide, what is decimal point? I know most persons in my previous classes, they always ask, what is decimal point in PIP? Is PIP calculated after the decimal point? The answer is yes. Now, if we go back to the example is showing 1 point. That point is standing as a decimal, 1.1051. Now, that point is called a decimal. So we start calculating the 4-digit number after the 1 point, which is the decimal point that is shown there. Now, what is pipette? A pipette is a fractional part of a pip. It's the smallest unit of measurement for price changes in the Forex market. Most currency pairs are quoted to 5 decimal places, with the 5th decimal place representing as a pipette. Now, this is a practical view on how the pipettes look like. This is my phone screen rather, and on my screen you can see like Euro USD at 1.1023 with a little digit number of 5. So that 5 there, mathematically we call it raised to the power. So that 5 is the pipette. Now when that 5 changes to like 0, the last digit number, which is the pip, changes its number. So the pipette is in mathematical form raised to the power. That little number you see there is called the pipette. Now what is lots? Lots in Forex trading represent the number of currency units you are buying or you're selling in a trade. Now we have different types of lot size. We have the standard lot size, the mini lot size, and the micro lot size. Now the standard lot size is 1.0, the mini lot size 0.10, micro 0.01, and the nano, which is never used, is 0.001. What I'm trying to say is that there are some broker or there are some prop firm that accepts trades of high volatility, and it's sometimes using 0.001 can actually make a move in profit or loss. When we go further in our classes, you'll be able to understand the terms. So this is the practical view of calculating a lot size. Of course, if you have $100, you cannot be using 1 lot size. You cannot even be using 0.5 lot size. The best lot size to use is the 0.1 lot size. Mostly when you're trading gold, you can probably use 0.05 or 0.01, which is the height of what you can use. Maybe if you're trading GBP, USD, Euros, USD, and stuff. So the more, as you can see, the higher the money you can use, the bigger the lot size. The lot size determines your kind of profit. If you're using 0.01 lot size on a $1,000 account, and another account that you're using 1 lot size for that $1,000 account, the difference will be much, because it's just like you going to the market and you're bidding with so much money. The lot size is like you're bidding with so much money. Of course, if you're bidding with $1,000 and you're using another bidding for $100, what do you think? You're going to be getting something bigger if you're using the $1,000. If you have any question, please don't forget to comment your question so that I can treat it in our next class. And don't forget to like, to subscribe, and to share this to your friends. Now, moving on to spread. In Forex trading, we have what we call spread. Now, the Forex broker will quote you 2 different prices for a currency pair, which is the bid and the ask. Now, the bid is the price at which you can sell the base currency, while the ask is the price at which you can buy the base currency. Now, the difference between these 2 prices is called the spread. Now, let's give an instance. In the pictorial example here, the 0.9189 and the 0.9192 is about 3 spread. If you add 3 to 0.9189, it's going to give you 0.9192. You understand? So the spread is like the difference between the base and the quote, or the bid and the ask, the number of pip movements during that period. If you move from 3-digit number or 4-digit number or 5-digit number, that is called a spread. If you can see my example here, the spread between 1.105 to 1.1051, it is called 2 pips. That 2 pips is called a spread. Knowing all this, I believe you can be able to explain or understand what PIP, pipette, lot and spread is. Now I want you to do something for me in the comment section. I want you to explain the difference between spread and PIP. If you can be able to give this, I have a gift for you. If you can do this, I have a gift for you. Whether you're from Nigeria, you're from the US, you're from any part of the world, I have a gift for you. Stay tuned for our next class, because our next class we're going to be teaching you how to go about with your account opening, and how to make use of the Meta 4 and Meta 5, how to create the demo account. So stay tuned. Don't forget to subscribe, and don't forget to share to your friends. This is Boss Lady. Just call me Emily Bruce. See you in our next class. Bye-bye.